Hey traders, checking in on the stock market today. Reaction to CPI numbers this morning and more sector rotation going on. We started real strong in the financial sector this morning and then sold off hard into the close. And the healthcare bulls are showing up. We'll see who benefited today and who sold off. So looking at SPY, the bulls got a new all-time high. Checking on the S&P 500 futures, we've got this uptrend resistance line on the 4-hour time frame that we're keeping an eye on. Look at that support hold. I believe I did adjust this line just a tiny bit this morning, but holding that support and still remaining in this uptrend line. So keeping a close eye on this 4-hour uptrend after it's been respected so many times, and resistance is not in play in the short term. But what we saw today was the financial sector started the morning really strong. It sold off. The tech sector started lower, and then they just did this all day. And the healthcare sector, as we'll see in just a moment, has been really helping the bulls out as well. So today was the ideal day for short financial, long growth. And there are other days where that is the inverse, but more often than not in the last 3 weeks, that has been the way to be. Looking at QQQ, inside bar bull break, and now it's just all-time high, 342.80. And I've said in recent videos, I think I've said it somewhere, that we will need Apple and Amazon, in my opinion, to break their sideways daily ranges if QQQ was going to see all-time highs. And Amazon is playing a big part, breaking this daily range, playing a big part in helping QQQ get back to that all-time high. Apple is still range-bound. Look at this resistance now with 4 tops right up around the low 128s, and we're looking for a daily high or low, but Apple staying range-bound while Amazon gets the bull break. IWM daily consolidation, we're looking for a higher low, anything above 224.04. The hourly chart, we are looking for a trend change attempt. And watching first hourly oversold conditions, decent little bounce. One other note, look at SPY. So SPY, and shout out to a member who pointed this out. And I generally don't trust back burner trades. And again, Google back burner trades if you don't know what it is. But I don't trust them on as much on ETFs and SPY as I would an individual stock. But member Akash pointed out SPY 5-minute back burner this morning coming off the all-time high, first 5-minute oversold, and that marked the low of the day. So my style of trading, I did not take this trade, but my style of trading would be exit half on initial bounce, put a stop under the low, 0 risk, and then let it run a little bit. And it certainly played out with a lot of follow through. We did end up with an equilibrium into the end of the day. Half-hour time frame shows it. Took a long time to find that lower high, but overall, bulls keeping their control. So IWM, we're scouting a daily higher low. You'll notice I don't ever say anything about any of the fundamental numbers in these videos. Honestly, I can't tell you anything about the CPI numbers today. And while that might be to my disadvantage at a dinner conversation with someone that's into markets, has absolutely nothing to do with my trading whatsoever. I could care less what the jobs numbers say, what the CPI numbers say. All the information that I need is on these charts. XLF. That's not to say that people can't find useful information and have it be an aspect of their trading style. For my trading style, it means 0. XLF, so higher open, pullback all day, bearish engulfing candle. This is the first time the bears are proving anything to us in a few weeks. We had a 4-hour rising wedge-like pattern that finally rolled over. I did exit half of my XLF short a couple days ago, maybe last week, but I still have half of it. And again, today was that ideal day for my hedge going up and my long positions going up as well. So XLF 4-hour oversold conditions, weekly consolidation very clearly underway. I was looking for this pullback in the financial sector back here. And I was looking for it to align with growth. Growth up, financial sector down is what I thought it was going to be. We had growth up, but no financial sector down. Now the question is that what's playing out now? Potentially. Today it certainly was. Question is, how much control can the financial sector bears see from here? Healthcare bulls changing the daily trend bullish. Higher low, higher high. And again, it's always the quiet sector. They don't have the flashy names as part of the healthcare sector. And so it's gone up 3.5% from the low of Tuesday. That's a big time move for an entire sector. And it's the second largest holdings as far as the sector is concerned in SPY. So here we are testing the all-time high, 125.66. And it's a big part as to why SPY was able to ignore any XLF weakness today. Biotech sector is also benefiting from the healthcare sector strength. Can't hurt. They're certainly similar to each other. And quick little support established at 133.35. Close up near the high. And again, all these bulls are doing is just continuing to create more and more space for a weekly trend change to take place eventually. And here we are creeping up on the high of May to try and set our monthly high or low off EMA 12 support. And I mentioned it in the crypto video, just might as well mention it here. There's crypto mining stocks, MARA, Riot, and Bitcoin itself is trying to do the exact same thing that the growth names did. Massive run to all-time high or many-year highs, pullback for a couple months to monthly EMA 12, trying to set the monthly high or low. I'm watching for the same thing. And again, it's the bulls having to prove it, but it's the same setup. Semiconductors holding the daily uptrend. Anything above 244.80 was a higher low. We set the higher low now on the inside bar bull break at 246.27, and bulls are trying to follow through. NVDA is a picture perfect bull flag. Inside bar bear break. The bear break took out one support level of 690, couldn't take out the low of Monday, and no bear follow through. So possible daily bull flag on NVDA. If it were to confirm it, we would certainly be looking for SMH to confirm a bull break of its sideways daily range, which you condense it to the 2-day time frame, it's a bull flag as well. TAN, trying to catch up. Break of 80.97 would be a weekly trend change. Technically speaking, low, high, we pulled back. Higher low is trying to form, and a break of 80.80 would increase the odds significantly that a monthly higher low is forming. So bulls would love a break of 80.97. If we don't get it, we'll have a tightening daily range to be watching. But the most bullish day for the sector in the last 2 weeks, really. MSOS, doing nothing for the bulls. We are range bound on the weekly. Made my comments about the sector yesterday. And again, just patiently watching and waiting. And if volume does not show up, nothing's going to happen. Burden of proof is on the bulls, and they can't prove anything without volume. So weekly support, 38.26 key for the bulls to maintain sideways. They're not even trying to break out at this point. They're just trying to maintain sideways. The VIX tried to break daily resistance, 19.27. Couldn't do it. Lower high formed. And looking back down at the 15.15 low. It would be a possible inverse head and shoulders to keep an eye on. But again, we would need a very notable shift. And we would need something that we just aren't seeing. All major sectors at the low at the same time. The dollar, daily higher low. Is it set? Did we change the 4-hour trend? Didn't change the 4-hour trend. So key support is 89.83. Bulls will need more follow through. It's a weekly bear flag, as we know. And the bulls have to prove to us it is not a weekly bear flag by getting over 90.63. Weekly inside bar likely to close tomorrow. And then we'll watch how the weekly inside bar breaks next week. A bear break increases the odds significantly of a weekly bear flag. And a bull break will have us testing the high of the bounce. Gold, nice save by the bulls. Daily lower high was set, but a very significant bounce. So lower high, 19.04, rounding. And then we held support. And now the bulls are looking right back at resistance. The weekly bull flag is remaining alive on the metals. Same thing though. We're likely to form a weekly inside bar. They're just doing the exact, everything that I say for the metals is just the exact inverse of everything I say for the dollar. Inside bar. If it breaks bull, it's a weekly bull flag, very likely. If it breaks bear, we look down to the low. Silver, same thing, right up at resistance. Little daily higher low, trying to break that resistance. Weekly bull flag, possible. So metals bears are not proving it. Miners. So miners were weaker. and they played catch up today in a very big way. So just like that, after miners were at the low yesterday, we hit the highest price in the last 6 trading days, and that now aligns. Now it's stronger than the metals, just like that. After being weaker than the metals, it's stronger than the metals. Was looking at it to be a potential early indication, and the reaction to the CPI numbers certainly prevented that. So a little bit of a fake out from the metals, and that just goes in my mental log. I've seen plenty of times where the miners do give clues. Today was a time where it failed, so I'm making note of that. And by failed, I mean it failed to tell us that the metals were going to see weakness. Oil, resistance still stands, uptrending resistance. A lot of volatility today here as well, but maintaining the daily higher low. 68.47 was support. We held that level by 21 cents, and here we are looking up at the highs. Natural gas, inside bar bull break, double top at 315, but keeping the 4-hour uptrend intact, which is important for the bulls to keep doing, to try and follow through with this cup and handle-like pattern on the daily. And it's keeping the energy sector strong. Some profit taking today, but if the energy sector is going to see any real pullback, we're going to have to see some pullback in these commodities as well. So, growth still looking pretty good. We'll see how long that keeps up through the month of June. So I didn't do a whole bunch of trading today. Really, my in the zone trading days are Monday, Tuesday, Wednesday, where that's just as locked in as I can be. My sleep schedule, everything. Thursday and Friday are my off days from live streaming, and so I do a lot more yard work. I schedule any appointments or any errands that I have to do, or oil change or all that stuff. So Thursday and Friday, I am a less serious trader, and that's a nice mental break as well. But it doesn't mean I won't trade. So today, just an example, I was out in the yard for an hour, and when you have an edge and you're very comfortable with that being your edge, which is a certain style of trade, you don't need to be 100% in the zone to benefit from a setup. So just as an example, TLRY, you know my edge is oversold bounces. So I was watching TLRY. I wasn't watching it. I was out in the yard, and I came back from being out in the yard, and rather than being where I'm sitting right now with monitor, I was on my living room floor with one screen, just checking in on things, checking in on the chat room, and I pull this chart up and I say, okay, 5-minute waterfall. All right, I may be interested in a bounce. I'll be interested if it's a 2-minute waterfall as well. I zoomed into the 2-minute chart, and it was a waterfall. We had just dropped 5% with no 2-minute bounce, and we broke $20. Oftentimes, you will see a psychological level break right at a climax, whether it's a climax top into consolidation or a climax bottom into a bounce. So those 3 factors, 5-minute waterfall, 2-minute waterfall, 20 psychological climax, I entered. I started scaling in. And we had already broken 20 at that point, so I bought, and my first fill was 20. And if we had no 2-minute bounce and a straight waterfall kept dropping, I would have entered another position, probably 1970, and then placed my stop loss based on the dollar risk that I was willing to take on the trade. Fortunately, the bounce started following through right away, and I sold from 20 to, I forget what, maybe 2017s in 2.5 minutes. And that is a 45% day maker. So that's just an example of when you add up the experience and you add up the 10, 12, 15 years of trading and you have the comfort, it's a lot easier to just come in and make those trades without, watching for 2 hours and establishing your game plan and thinking about things really in depth. So that is something to work towards achieving. And again, nothing can replace time and experience. So if you're on year 2, 3, 4, it's going to take year 5, 6, 7, 8 to get to that point. At least I'm on year 11 at this point, and I wasn't comfortable to do this year 5, 6. So time is needed. That was a successful trade. And there was a failed one. GME, stop out, break even. Tried to play this bounce as well, just crushed. And again, came and sat in and saw, okay, 15-minute crushed, 5-minute, 2-minute. Everything has crushed RSI levels. This was later in the afternoon. And it was right here. And what I was doing was just playing this initial bounce. So again, the 2-minute RSI was hitting 20. The 5-minute RSI was hitting low 20s. The 15-minute RSI was hitting teens. And the hourly RSI was hitting mid-20s. So everything crushed, everything in a waterfall. But I know GME can get more extended to the downside. It definitely has an asterisk next to its ticker in my brain saying, okay, this isn't, I'm not treating this as if Apple were giving me the same signals. But it was enough for me to make an entry. And honestly, what it was, a member in the chat room posted a really nice exit on their puts and a really big win on their puts. And that's made me say, hey, congratulations, pull up the chart. And right after they posted it, I said, okay, all of those things I just highlighted, waterfalls and RSI levels, I'm ready to start scaling in. Made it a first entry in the 221s. The bounce got going. Exited half in the 225s. So instantly, I have a risk-free trade. So my break even is 215. My stop goes under 220. I re-entered half on this higher low. And this was me going aggressive at that point. If I'm not going aggressive, I'm leaving it alone. And worst case scenario, I stop out with some small profit. I went aggressive to see if the bulls could confirm the trend change for bounce follow through, because all of these longer term time frames are crushed and only the 2-minute and the 5-minute RSI cooled off on that bounce. So I re-entered the half that I sold in the 225s, and I re-entered him in the, I forget what, 223s or 224s. And at that point, I gave up my chance at a small win no matter what, kept my stop under 220, and now I'm risk free. So if my average was 215, I get back in 224s. My break even is now 219s. So stopped out, break even. So I gave myself the possibility for a big win. If that trend change had confirmed, that's a multiple day maker for me. And worst case scenario happened, which is break even, which is my kind of worst case scenario. So all in all, not a very eventful day. Swing trades went well for my positions that I have open still. And just a little day trade win. Nothing notable. Have a good rest of your day. See you soon. Do good things.